Hello friends, today we are going to discuss very important question because some of the questions like admissions will come and the adjustment will be changed. So there is no any guarantee about it, but still there are certain questions which is like surely gonna come and easily you can get 12 marks. So here we have prepare common size balance sheet of Bombay Textile Limited from the following information. So share capital is given 24 lakh and for 2017 also 30 lakh. Reserve and surplus 10 and 10 respectively. And after that we have long term borrowings which is also 10 and 12, trade payables 21 and 31 and 65,000 and 83,000 respectively. And after that assets, here we have fixed asset, tangible, intangible, investment and inventories given on the following years respectively with a total of 65 and 83 lakhs. Now we need to write a common size balance sheet. It is very easy method. First of all, you need to take all the liabilities. First we will take all the equity and liabilities, non-current, current. We need to classify them on this equity, non-current, current. So equity will get share capital and reserve surplus, non-current will take long term, and short current liability will take all the short term payables, that is trade payables. Now we'll write down all the questions here. 24 lakh, 10 lakh, after that we long term is 10 lakh and trade payables is 21 lakh. Overall we are having the liabilities of 65 lakh, which is already here in the question. And for the 2017 year we have the liabilities of 83 lakh, which is also already there in the question. Okay, now how we need to, what we need to take, only we need to take the percentages of 2016 and percentage of 2017. So how you will take the percentage? 24 lakh divided by 65,000, 65 lakh into 100 will get this percentage. After that 10 lakh divided by 65 lakh into 100 will get this percentage. When you add up this two percentage, you will get this answer. Okay, or else you may take it as 34 lakh divided by 65 lakh into 100, you will get this answer. Okay, and then 10 lakh divided by 65 into 100, we get 15.38, and as it is we'll write down. And then 21 lakh divided by 65,000 into 100, we get this form, and we need to calculate this. We need to add this, this and this, by that we'll get 100%. Like this itself, similarly 30 lakh divided by 83 lakh into 100, we get this percentage. 10 lakh divided by 83 lakh into 100, we get this percentage. When we add this two, we get this percentage. Similarly 12 lakh divided by 83 lakh into 100, we get this percentage. As it is, we'll take it down, and the same thing we need to do, and the percentage will get, we'll take it down, and the three of the heads we need to calculate and add, by that we'll get the answer 100. After that assets also we need to classify to non-current and current. Non-current are the fixed, tangible, intangible and investments, and current are the investments. Okay, short term investments. So here we have taken the years wise respectively, only we need to add out the percentages. Okay, 16 lakh divided by 65 into 100 will get the answer. Similarly 28 lakh divided by 83 into 100, we will get this percentage. After calculating the percentage, we need to add, and then as the long term as non-current asset, and this is under the heads of current asset. After that we can, as it is, add it up, and we need to write the total. Okay, as it is we need to write, and with this total we need to take the percentages. That is it, and it is the sure question to be asked. By doing this easily you can get 12 marks. This is a must question. Okay, it is very important. Surely you're going to get this question to be asked for your 6 marks, and easily you can get 6 marks in this. The question is, Anita and Kavita are partners sharing profit in the ratio of 3:2 with capital of 1 lakh and 60,000 respectively. Interest on capital is agreed at 6% per annum. Kavita is allowed an annual salary of 5,000. During the year, Anita withdraw rupees 10,000 and Kavita 5,000 for personal use. The interest on the same being rupees 1,000 and 500 respectively. The profit year ending of the March 31st amounted rupees 25,000. We need to make the profit and loss appropriation account. So first we will take out this one by profit and loss, that is 25,000. After that, interest on drawings. Why here interest on drawing goes on the credit side of the profit and loss appropriation is that it is an income to the company, okay, and interest on capital is a expenditure to the company, so it will come on the debit side. So here we have the capital of Anita is the capital of Anita is 1 lakh. In that 60% we need to take as drawings, and 60,000 of Kavita, in that we need to take draw the interest 6%. So 1 lakh into 6%, 6,000. Kavita 60,000 into 6%, 3,600. After that, Kavita is eligible for salary, annual salary, that also we have written. Okay, now here interest on drawings, it means how much of drawings they have done. So she has withdrawn 10,000 and Kavita has withdrawn 5,000, okay, for personal use. So for that they need to pay the interest of 1,000 and 500. So profit for the year ending, so done, almost we have done. So 25,000 plus 1,500 is 26,500. In that we need to remove 6,000 interest, 3,600 and 5,000 of salary. By that the remaining is 11,900. So that we need to share that into the ratio. So 11,900 into 3 by 5 and 11,900 into 2 by 5. By that we get the answer. So this is a must question. What you need to understand here is that interest on drawing is a income to the company. It's a income to the company. Why? Because they have withdrawn the drawings, so that they need to pay certain amount as drawings. Here interest on capital means they have contributed the capital, so the company needs to pay certain interest to the partner, so it is the expenditure. So that is why interest on capital comes on the debit side, interest on drawing comes on the credit side. So this is another important, very important video. I mean to say, this sum is very important, so please stay in my video and go through with this. So Akash, Anil and Adarsh are partners sharing profit and losses in the ratio of 3:2:1. The capital as on 1/4/2017 were rupees 70,000, 90,000 and 60,000 respectively. Akash died on 31/12/2017 and the partnership deed provided the following. So interest on capital 8%, Akash salary 2,000 per month, his share of accrued profit up to the date of death based on the previous year profit. Firm's profit for 2016 to 17 is 24,000. His share of goodwill is 12,000. Now he has expired, so we need to immediately pay off. Okay, so here by balance his capital 70,000 and interest on capital. Interest on capital is here 8% we need to calculate. So 70,000 into 8%, as he lived till December. January, February, March should be ignored. So 9 months will take. 9 divided by 12, we get the interest of the year 4,200. And then salary 2,000, he is eligible every month. He lived 9 months, December he died, so 3 months will ignore. And 2,000 into 9, 18,000 is his salary. And then after that we need to take off last year's profit to calculate his profit. Okay, his share of profit is 3:2:1. So Akash share is 3. Okay, 3 by 6. So last year profit will take off 24,000 into 3 by 6 into he lived till April to December, so 9 months, April, May, June, July, August, September, October, November, December. So 9 divided by 12, 9,000, and his goodwill is already 12,000. We need to add it up all and we need to transfer it to the executor's account. that is 1,13,200. So we are having another important not a video but a sum. From the following information extracted from the books of Karnataka, prepare balance sheet the company asset statement 31st/3/2017 as per schedule 3 of the companies. So already question is given, answer is also given. What you need to do is to arrange them in a proper manner. So what will come under shareholder will come under equity and liability, non-current liability will come under the equity and liability, sundry creditor will come under the current liability. Okay, so you have to classify them according to these heads and you need to write down the amounts. Okay, after that in asset also you have non-current assets, by that you will take fixed and fixed for the non-current, and then for the current asset you will take sundry debtor and inventories and cash equivalents. So you will write down, and as it is you will tally it. Okay, 4,80,000 and 4,80,000. Okay, sorry, 40,80,000, 40,80,000. By this easily you will be able to get 6 marks. We'll discuss another important question which will give you 12 marks. Okay, it's very easy, and what you need to do is, this is based on the trend analysis. From the following balance sheet of LG Industries Limited, compute the trend percentage using 2016 as base year. So we need to keep this 2016 as base year. Okay, now we need to write down the answers. First we'll write down according to the classification. So it will come under the equity and liability, okay, long term loans, it will come under the non current liability, and trade payables will come under the current liability. Okay, by that you need to write down as it is, leaving one gaps. Okay, for trend percentages you need to leave one gap, but write down the question as it is, but you have to classify. Okay, you have to classify. After that, non current asset and current asset. Non current asset, this one, inventory, trade receivable and cash equivalent will come under the current asset. Okay, as it is, write down the amount, leaving one gap after this. Okay, how we will calculate the trend is based on this. Okay, we have to keep this as a base here, so this will all remain as 100%. Okay, we are going to take this as a base year, so that is why it will be 100%. Now what we need to calculate for this, we need to take 2,50,000 divided by 2 lakh into 100 means we'll get this answer. 1,50,000 divided by 1 lakh into 100 will get this answer. Similarly, 3 lakh divided by 2 lakh into 100 will get this answer. 2 lakh divided by 1 lakh into 100 will get this answer. Okay, similarly you need to calculate the trend based on this base value. Okay, because it has already told that 2016 will be the base year. Keeping that base year, you need to calculate this. Okay, 1 lakh divided by 2 lakh into 100, this 50. 4 lakh divided by 3 lakh into 100. 9 lakh divided by 8 lakh into 100. Likewise you have to calculate, and lastly you have to add up an answer. Okay, why? Because liabilities and asset will tally always, so that is why we'll have same kind of balance. So now we are going to go through with another important 6 marks. Here we have got all the statements. Okay, now we need to write them according to it. So first of all we'll write revenue from operation 10 lakhs, and then revenue from operation, from that we need to we need to add all the expenses. So cost of material, so here we have revenue from operation, we are done. Okay, now we need to take cost of material consumed, closing stock, where is the purchase, yeah, expenses incurred to earn the income shown. So cost of material in this purchases will come. Okay, raw material, everything to which comes under to manufacture the goods, that will come under cost of materials. And stock in trade, it means which we use for the purpose of trading. So changes in inventories, so that will all come under in the stock in trade. Okay, stock in trade and closing inventory will come under this. So employee benefit, all kind of salary, wages will come under this. Interest payment will come under this head. So depreciation will, all the depreciation will come under this head itself. So based on this, if we take, we need to take sales at the revenue from operation. We need to take the revenue from operation. So we'll take out sales as 10 lakh. Okay. After this, okay, we have taken the sales. Now expense is cost of material consumed. This is purchase. So purchases, adjusted purchase is 4 lakh. We have taken 4 lakh here. Employee benefits are wages plus salary. So where is the wages? Wages is here 1,20,000 plus salary 80,000. Overall 2 lakh we have written. Finance cost is any kind of interest which is being paid. So here for debentures, it is 10% debenture issued on 2016, 1 lakh. So 1 lakh into 10%, that is 10,000. Depreciation and amortization is 16,000. So this is 10 lakh, this is 6,26,000. So minus 3,74,000. So this is the profit before tax. So here Mahesh, a partner in firm, withdraw the following amount during the ended March 31st, 2018. As it is, note down all the drawings. As it is, note down all the amounts. Okay. Now note this. This is 1st May. May to March you need to count. May, June, July, August, September, October, November, December. May, June, July, August, September, October, November, December, January, February, March. So how many months? 11 months. 30th September, 30th means we need to leave off September. October, November, December, January, February, March, 6 months as it is. 1st of November means we need to add November. November, December, January, February, March. 31st of January means we need to leave off January, February, March. So 2 months. As it is, we have taken the amounts. As it is, we have taken the months. Now calculate. 10 into 11, 1,10,000. 8,000 into 6, 48,000. 7 into 5, 35. 12 into 2, 24,000 respectively. We have written the total now. So what is the formula for the product method? Is interest is equals to total product into 1/2 into ratio of interest. So 2,17,000 into 1/12 into rate of interest is already given 9/100. By that we have got the answer.